All right. Hey there. Welcome, everybody. Chris Franks with Texas West Capital coming at you live here just a few minutes after 11 a.m. Central Standard Time here on Friday, July 7th, 2023 for what's been quite a rainy week here in just north of Houston. So glad to have you all checking in. Let me see here. We do have FiboSwanny coming in today. Just a heads up, he's having a little bit of technical difficulty over there. So if he lags a bit at times, just understand we're aware of that. And unfortunately, things are what they are. And we'll hopefully try to get our ways through this. All right. Albert Lee there asking for TA on optimism. He did say please. So I think we can probably get to that. Andrew Bennett, what's going on, man? Data, good to see you guys here and everybody else listening in. Let me see, put out some light here. Maybe this will be a little bit better. Hopefully you guys have had a great week. Bears will be Bears. They keep doing their thing. They're like, oh, look, we still can't make it past 31,000. So we're definitely going down. And I've got a different look on that. So we'll talk about that. I think Fibo probably is about the same there. So we'll kind of give you our reasons why, and you guys can decide what you think afterwards. Soren, what's going on? 3-day Death Cross. Good to see you. Yes, Mr. 3-day Death Cross here, talking about the risk management workshop tomorrow, guys. You guys can get registered there at the t.ly/N9 /LQA, a shortened version of a really long webinar address to get on there. But it'll be a workshop, guys. And I'm putting this together because basically at the end of the day, risk management is the single greatest thing you can do to increase your odds for success as a trader. And I'm going to actually show you my risk framework tomorrow that you'll be able to implement immediately afterwards. And in doing that, we'll just take all the guesswork out of how do you do risk management properly. It'll tell you how much you should be risking, no matter where you're, entering your trade at. We'll talk about where your stop losses should go. And we'll even talk about a way to kind of consistently lock in those profits that you get there as well. There are some bonuses with that. You guys can head over to that link there and check them out. And man, we'd love to see you guys there. I'm telling you, it is going to be the number one greatest thing you can do to increase your success as a trader. So make sure that you guys are jumping in on that. All right. So by the way, make sure you have liked, you've commented, you're following me, you're subscribed to the channel, depending on where you're seeing us out here. And we can get going with all that, right? Mark, what's up, man? Good to see you checking in. Let's pull up FiboSwanny over here. Look at that. There we are. Let's kind of pull us up like this here. There we go.
There we go.
How you doing, man?
Not bad at all. Not bad at all.
It looks like you're doing all right first off here. So we'll knock on some wood and then,
let's
hopefully it holds out there.
Hopefully it stays smooth.
Dan, looking forward to you guys as well. Soren, you guys are coming into that risk management workshop tomorrow. So listen, hey guys, today we had this morning. Let's talk yesterday. Yesterday, ADP came out. ADP had their, private payroll estimate thing that they had coming out. And they said, hey, listen, we got 490,000 jobs added last time, which was well above the 220,000 expected, right? And if you guys are following my Twitter, I made a comment that, hey, they're rarely in line. So we've got the real, NFP numbers coming out today. And basically what I was trying to say there was, we should expect something not quite as drastic, right? Sure enough, NFP comes out today. We actually missed. So I think we had like 209,000 jobs. Let me look over here. We expected 225,000 was the expectation. We only had 209,000. So jobs were soft. They missed. We had 306,000 previously. Now that was revised down a little bit from 339,000, but nonetheless, we went from 306 down to 209. Let me see here. The unemployment rate, it was 3.7 last time. It was expected to be 3.6 this time, and that's what it came in at. But importantly, guys, I keep telling you guys, it's more than just the jobs number here. The average hourly earnings is really kind of what the Fed is really looking at, because obviously if you're making more money, more money to spend, right? And so the average weekly earnings year over year was 4.4 last time, which was revised up from 4.3. We expected 4.2, but we got 4.4. So, we were a little hot on the average hourly earnings. They went up. And that was year over year. Month over month, same thing, though. We had 0.4 last time, expected 0.3, came in at 0.4 this time. So we did have a decrease in jobs added, but the average hourly earnings were up. If we look at where the jobs came in, it's always important to keep up with a lot of the, what do you call it? Restaurants, stuff like that. I can't think what the heading is at the moment. But yeah, that's where a lot of it came in. But the second place where jobs came in was construction. Now, we've talked about construction over the last, I guess since last year, because it seemed that construction companies were hoarding construction workers, right? They weren't laying them off. Remember, because we were looking as we were coming in, everybody's talking recession, and you have to have this downtick in employment, this uptick in unemployment to kind of get that, right? And that's usually kind of where we're looking. Because especially because the housing went so high and your mortgages went so high and whatever. But remember, they weren't letting the construction workers go. They were hoarding them, and now there's even an uptick in those. As it looks like maybe the bottom of the whole housing thing kind of came in. The last three readings we've had coming up, it keeps rising. So. We've got a lot of stuff going on. People are always still talking right now about recessions and whatnot. But, guys, honestly, at the end of the day, as long as consumers are spending, the recession is going to be real, basically impossible to get in there. Consumer spending here in the U.S. makes up about 70% of GDP. So, people can talk about, credit topped and all this stuff. But until we actually see it happening, I wouldn't even be thinking about recession for right now. That doesn't mean it can't happen, guys. But right now, with the numbers that are coming in, things are coming in. It doesn't make any sense at the moment. Still, all right. Andrew says construction still hard to find good help. Hey there, Ross Mark, Angry Patrick. Good to see you guys. Ross Mark says catering. Yeah, catering. All the stuff we kind of do when we have extra money, right? We eat out. We go to and so all those kind of jobs related to that. I'll think of it here in a minute what the word's called, and we'll get.
I can't think of it either.
Yeah, see, I don't even have any help here. FiboSwanny just sitting over here, just sure, yeah.
I'm just listening.
Yeah, you can say that.
Hey, until people stop buying $6 coffees at Starbucks, I don't think there's going to be any problem.
Will they ever stop doing that though? Honestly, I mean, I'm not a big coffee guy, but
I'm old school, man. I can still get it by the pot. You know what I mean? You put it. You actually have a pot that you pour. But
yeah. So there we are, guys. I mean, there's kind of like the groundwork of what we're looking at here. I just saw a clip with Tom Lee. You guys know at Fundstrat, and he made this interesting statement about the S&P where he said that no bear market bounce has lasted longer than the bear market, and so around July 21st is when that's going to hit. So unless something really weird happens and we just kind of like dive below the swing low, according, to what Tom Lee's saying here, over decades, that's got to be a confirmation that the bear market is over with, guys. We still got people arguing about it. I've been talking about this. Fibo's been talking about this since, Q4 of last year when we got around that, depending on what market you're looking at, October, November, whatever, swing low. We've been talking about the bottom looks like it's probably in. And naysayers have been arguing and yelling and screaming and beating their chest ever since, giving you reasons why it can't possibly go up. And what has it done? It's continued to go up. So I say that, guys, because Fibo and I are both technical analysts, okay? We both are strong believers in the charts tell us what everybody's feeling and the way everything's going to go. It's not the other way around. People try to look at the charts and then say, oh, this is what's going to happen. Whereas we look and we go, okay, the charts are telling us what's happened. So we just follow the charts, right? And I'm telling you guys right now, especially, fundamental analysis, guys, takes a lot of times it takes a lot of understanding of things people don't want to understand. Accounting, you got to be able to discern through the SEC filings, stuff like that. And you have to, first of all, you have to get these numbers right. You got to get projections right. And then you have to get the result of all that right. There's a lot of steps or you're going to screw up along the way.
Yeah, fundamental analysis. You have to have all the different variables in your model, and every one of those variables has to be right. Because if one variable is off, your output's going to be off, and it's going to throw you off.
Exactly.
So I think fundamental analysis is pretty tough.
Yeah.
I mean, not that TA is not easy. I mean, anybody can learn it. But it's the risk management skills that you're going to be teaching in your deal. Those are the key concepts. But I mean, when you take the first basic tenet of TA, the market discounts everything. Unless you believe that, then you might as well not even do TA, because in your head you're gonna be like, well, this is happening and this is happening and this is happening, and you're trying to work that in. Market's already worked it in for you. I mean, that's the way I kind of look at it. So
I'm a firm believer, guys. You know me. I've got extensive education, but you don't need that to be successful as a trader, guys. And I always want to point this out, because inevitably, at times new people start falling to be like, oh, well, you do this because you've got all this. You must be smart. You've got your law degree, a couple of master's degrees, whatever. And it has nothing to do with that. You don't have to be overly intelligent to be a very successful trader based on technical analysis. But if you're going to do fundamental analysis, it's going to require that you learn a lot of things that most people don't want to learn. And then you have to get stuff right after that. Technical analysis, guys, I'm telling you, is a lot easier at the end of the day. But you have to be open. You have to be open when you learn technical analysis. You get too many people online say, oh, it doesn't work. And yet we show you week after week after week, it does work, right? Now, that doesn't mean you can always get it right. We're humans. We're going to make mistakes, right? We're by design, by default, we're going to make mistakes, right? We're fallible. But that doesn't mean TA doesn't work. It just means we read it wrong at the time. But I'm just telling you guys, if you're just getting into trading, you're just starting, whatever, first thing you have to absolutely learn is risk management before you learn anything else. It doesn't matter if you learn Fibo's threshold theory, if you learn Elliott wave, Wyckoff, pivots, price action, whatever, of a billion different things you could learn. If you don't have risk management down the way it needs to be properly, you can learn all those to the best of anybody out there, and you will not be successful as a trader, because your risk management is going to screw up. Because no matter what of those ways you're trading, you're still going to get things wrong at times. Your risk management is a way of protecting you from those times when you're going to be wrong. So hopefully I've made sense there, guys. Join us tomorrow. It's going to be awesome. And
the first 3 years of when I took over as the TA guy at work, I'd say the first 2 or 3 years was really spent convincing people and showing people that it actually is a valuable tool.
Yeah.
I mean, because there's a lot of skeptics out there, and there still are.
Oh, every day. Yeah.
But over time, I started to show them, hey, you can actually get some good information from this stuff. Let's start using it. And now, 19 years later, I'm the go-to guy. They want to know what's going on. Hey, where's the market going? What's happening? Because they know that it actually means something. Now where I'm at, there is fundamental analysis and technical analysis, and we fuse it together. But we're also trying to measure a commodity, and it's a whole different ballgame. But if you just take it from a trading aspect, bringing fundamentals into it just kind of muddies the waters. I mean, it really does. Yeah. So, but it's definitely a tool. But like you said, I like what you're saying there is, no matter what way you look, if you look at threshold theory or pivots or whatever, whatever you're using, and maybe there's, little bits of each, and you come up with your own, kind of thing. And I'm hoping that's what people do, to be honest. But once you do that, you still need the risk management, because without it, none of these processes or strategies or anything work, because you're just going to get emotion, and you're not going to take profit when you should, and all of that. And that's what risk management's all about.
For you to say.
Yeah, exactly. So no, I like what you're doing there, man. And I'm pretty sure that the guys are going to, and gals are going to get a lot out of that risk management for sure.
Yeah, that's the whole goal. I mean, if you can't, like I said, if you can't get risk management down, guys, it doesn't matter what else you're learning out there. We come into trading, we want to learn all the fancy stuff and all the cool things, and we want to be like, oh, look, I told you price was going to go there. But we are going to be wrong at times, and if you don't know how to properly address that prior to it, you can be right 10, 15, 100 times in a row, and you can lose it all just like that on one bad trade, guys, okay? I got a question here. Dan's asking, will tomorrow's risk management workshop also be available to attendees for later review? Yes, that's one of the bonuses. I'm going to go ahead and I kind of wasn't sure about this because I've never actually put on a straight up workshop on risk management. I've never taught my risk framework. So I'm like, I don't want people to have coffee all the time, but yeah, we're going to do it. So that way, if you guys are, other places in the world, and maybe it's, maybe you're in Australia and it's like 3 a.m. in the morning or something, you don't have to worry about staying up for it. You guys can check it out afterward to get on there. Okay. So, so we've got all that. Andrew's asking, I'm not sure if I got that. Bear market was November 21 to November 22, right? Approximately 1 year. Yeah, that's Bitcoin. Yeah. And of course, that's in line with every other, it's like basically every other bear market, right? It's a year-long thing, and then it's done, and then we're up. So things, everything else aside, even though past performance is not indicative of future results, we're seeing the same thing play out again right now. So lots of interesting things going on at the time. And by the way, guys, I just want to reiterate the importance of BlackRock, Fidelity. I mean, all these guys, all of a sudden, they're all coming in, and it's all the same way now, right? The SEC kicked them back, said, oh, you're missing, we don't like what you're doing in these areas. Immediately that same day, they're all putting them back, right? Everybody's going to use Coinbase, with that. I mean, Coinbase is the big winner out of all this, guys. I think if you think about, we'll get on charts in just 1 minute here, guys, right? But I think this is really important to understand, okay? Because a lot of you guys try to trade based on sentiment and news and stuff like that, but you really don't understand what it means, okay? And so the important thing for you to look at is look at everything that's happened over the last 6 months, 12 months. Everything, from FTX to Binance to Coinbase to the SEC and everything they're doing, all this, right? And we get all this major, just all this negative news. And price basically continues to go up, right? And on top of that, now all of a sudden we have, Fink at BlackRock, who in 2018 said, oh, Bitcoin is a lot of money laundering and all this, now saying, man, this thing is awesome. We are all in, kind of idea, right? We know
he sees the money to be made by digitizing gold, is what he's saying.
Yeah. And so, now we're starting to see everything lean kind of that way. And you're seeing multiple congressmen kind of really questioning Gensler publicly, right? Like, post on Twitter, whatever. Listen, we're coming after you. What you're doing does not seem legit here. It seems like you've got some kind of personal vendetta rather than running the agency the way you should and whatever. So I think basically, with all that bad news and the fact that prices continue to rise should tell you that the bottom is in, and that we're probably going to see a turning of events. We're probably going to see the SEC quite likely allow a Bitcoin, which will be multiple Bitcoin ETFs, spot ETFs, right? ARK's the other one there. ARK was the first one in. So ARK's actually ahead of BlackRock. But the importance of that, guys, is if this turns out to happen that way, there is so much stupid money that's going to be just coming in to the markets. And so, because it has to, you've got to have the Bitcoin in the spot ETF, right? You can't just do it without it. So I think it's just a lot kind of going on there, guys. And, this first year out of a bear market, just transitionary, and everybody's like, I don't know. And they wait until price goes up multiple 100% before they go, okay, I'm in. And then it pulls back, and then like, what the heck? And then it goes back up again, and they're like, damn it. But that's real quick. That 5 seconds there is basically how it works. So yeah. So that's what we're kind of looking at there. I'm going to pull up my chart here real quick on Bitcoin. We'll start here and see what we're doing. Let me kind of pull this down here so you guys got a better view there. So really, same thing I've been looking at here, right? Again, pretty clear accumulation down here. Price action volume relationships work really well. We had our jump across the creek, which is the breakout above the resistance. We had the pull back to resistance, which are back at the edge of the creek. 2 months of downtrend. Everybody talking about how we had to come down here and we were going lower and whatnot. And within like 6 or 7 days, we took that all back up. That was a good time, wasn't it, guys? Who made a lot of money right then? Come on, guys.
I'll raise my hand.
Fibo did. Fibo's swimming in it. But and so then we get here we're kind of going sideways right here, right along that swing high. Again, basically it's just this resistance right here, guys, right? But look what happens if we break out higher. All of a sudden, we've got this move up into the upper 30s, up into the 40s, pretty easily there. And so I wouldn't be surprised. And so here's the thing: the idea basically here is we've got a 1-2-1-2. So when you talk about Elliott wave, what that means is when you break out for wave 3, it's a 3 of a 3. It's a huge, strong move. You get big volume. You get big candles. And that's the move. That's where you get in. And it takes us up here minimum expected wave circle 3 target is up there at 43,380. This ultimately leads us to a wave 5, right? 1, 2, and we get 5 up here. Minimum expected right around $54,000. Same target I've been talking about for over half a year now. And people are finally starting to talk about the 40s at least. Nobody's really still talking about the 50s, but everybody's kind of finally giving into the 40s maybe. I say everybody. I say some people. We'll say that because most people are still looking for their rejection here. Would you agree with that, Fibbo?
No, I definitely agree with that. I mean, because I had the 48K called last December because my model was showing lows are likely in, but timing is always the bitch of it, right? Trying to find exactly when it's going to happen. June, end of June was the earliest, and that's already passed. But September 1 was kind of the latest part. So, I mean, it's a big range, but as long as the trend's going that direction and it hasn't failed, then I'm still looking for 48 as that target. Maybe even a little higher, like you're 54. But the 48 was just what my model said. But I could see 50, 52, 54 on a nice long candle. Not in a day, but you know what I mean. Some large candles.
So many people would miss out on that, man. One day, $10,000 candle or something.
yeah. But no, as long as the corrections hold and still maintain structure, then I'm still in it and riding it, and that's what we should do, right? What makes a good technician? Riding the trend until you get enough evidence to show that it's not going to go that way.
That's right.
Right now, it's still going that way, so I'm cool.
That's right, guys. Listen, what he just said there, what Fibbo just said. Don't change until the information comes in telling you otherwise. Yep. Don't get, oh my God, it's got to turn around here. No, it doesn't. If it's not telling you it's going to turn around, then why are you trying to short it, right? That's the problem people are finding all the way up here. You know, people keep trying to short. They keep trying to short, and it doesn't do their thing, right? I guarantee you, better. Yeah, exactly. And I guarantee you a lot of people lost that may be shorted in this upper area here where I'm at 1. We're doing good profit here, but they were looking lower. And this thing shot up so quick and fast, and they couldn't get out of their bias to the downside. I guarantee you they lost money. They didn't even break out even. They probably went into where they were negative before they got out of it because they were so convinced it had to go down. It was going down for 2 months, right? And they were always just like, it's just got to break down. They were waiting for that big move down, and instead they got the big move up. But this is what catches people, guys. So right here locally, I'm looking at either potentially it being done here, maybe as a 1, 2 here, as maybe like a flat, and we're going up for 3, or this is like a 1, 2, 3, 4 is a flat, and we'll get a little bit higher push up here for 5, then we'll pull back and then we'll go. But I think either way, I think this daily holds its support, this daily pivot that's right there around 29,000 almost. I think that basically holds its support. Now, if it doesn't, I can see us moving down here potentially toward 26.5 or so toward this S1 pivot. But again, that would just be one with a really deep 2. It wouldn't even be really deep, but it'd be like 61.8, 78.6 kind of pullback, and then we'd be up. There's absolutely nothing going on up here that has me in the least bit concerned about breaking down to new lows here below wave 2 at this point. Can that change? Sure. If we're breaking on down here and we're getting down this area and we're moving further below the S1 on the daily, then I'll start going, okay. And I'll look at what's, how are the waves playing out coming down. But man, until we get down below there.
Is that the 24K area?
Yeah. This is that 24,750 on this Bitcoin USD Coinbase chart. Yeah.
I got you.
Yeah. So until that goes down, guys, to me, it's just a pullback. There's no reason and even if it breaks down, there's still no reason to freak out. Because at that point, I'll go, okay, well, maybe this is just 1, 2, 3, 4, 5 as a leading diagonal. And at that point, I mean, even then, I'd expect it to probably find support. I could see it maybe going to 23, but again, that fourth area there, that would be 1, 2, 3, 4, 5 come down. But I don't know. At this point, guys, here's the reality of it. At this point, from the very low here, right, in November to where we are today, we're talking about 228 days, guys. 228 days. Coming off the all-time high Let's see. That was, let's see here. Right, it was right around 376 days. So yeah, basically a year. Andrew was asking earlier, basically a year coming down. That's what we usually expect. But we're already almost 230 days, guys, of upward movement. We've rallied. God, what is this? 103, 105% so far. Again, been like 7 months here, 8 months. I mean, if you're thinking bear trap or bull trap, I just, you are not playing the odds very well at all. And that's all you're really doing with trading, guys. I know a lot of people are like, oh, I want to be contrarian, and so I'm going to do opposite of whatever my feed says or something silly like that. They're not doing that right. You should, again, higher highs, higher lows. You should be default looking higher rather than lower, okay? I don't know how else to say that, but I'm going to put Fibo's chart up here, and he can tell you, maybe find a different way to say it. Maybe it might be more of a convincing to you guys.
No, like when you're talking about people shorting it and probably losing it, basically around this time frame that we've been in, I wouldn't even consider shorting until my weekly at least is bearish. Yeah. But my daily is not even bearish yet, so there's no way I'm shorting when my daily and weekly time frames are still well into the bull zone for me. But looking at the 4 hour, and here's another thing that kind of gives me a little hope, is that even with the 4 hour here, the 4 hour went into the bear zone a few days ago, and but the thing is according to my threshold theory, this previous shallow fib at 29,265, it has to actually break below that and settle 3 consecutive candles underneath that to even get the 4 hour bearish. So even though we went into a bearish zone, it's not really bearish. It's just more consolidation and probably accumulating some fuel to push us to the upside, because the 4 hour is not going bearish, even though we went into the bear zone. Now I got a target down there that I would actually add some more longs if it gets down to that previous shallow fib, and that's kind of that area that would give you your best risk reward, because you're going to buy it near that line and then of course stop it if it closes 3 settles underneath. But I like the way that the market's holding up support where it should, especially on the 4 hour here, to where upside targets are still in play, up around minimum 35K just off that next run. But then when you look over at the daily, here's another one that looks pretty good, is that still in the bull zone, easily in the bull zone, not even any signs of it really breaking down. Once it got in here and it rallied up, it actually hit the target at our fib extension for profit, and then it actually came back down and touched the shallow fib. So you could get back long here with a target of 35K on the way up. Because another thing is when I'm taking my trend-based extensions here, and I do it off the threshold, and I move it up to the top here and say that's where we got the high and the profit, and then it came back down and touched the low there. That's the 38.2% level on that move, and then you got a 61.8% level there, but the 100% matches that target on that trend-based extension. So once we get up, consolidate a little bit, it looks like it's setting up a nice pattern to work its way to the upside and get that and continue that move and continue that bull zone. So everything's structure wise is working really well. So that's one thing I'm liking with that, is that it's holding at the right levels, and the buying interest is there. So as long as that's happening, that's what I'm happy with. But this is what I was talking about on the weekly, is the hold here. Like I got the trend. I showed this last time, but the break of this trend line has basically 52K as a possible target on the way up here. But still in the bull zone. No reason to not. It's actually starting to build momentum again on a week over week basis on the ADX. So I like to see that. But when you look at this, it broke the trend line, came back down and retested as support, and then worked its way up, and then came back down, hit the 61.8% level again. Didn't really even have, it didn't even have 3 settles underneath the shallow fib at 27.3, which is basically where a lot of the buying interest is coming in.
Yeah.
And then it popped back up, and then we made a little bit of a new high above this week. So this stair step here of where this was resistance is now support, and then now we're testing it again, and the momentum's behind it. So I don't see any reason why, with the 4-hour holding and the daily still being bullish. I'm really liking the structure of this continuing to move on out of here, and hopefully sometime between now and September 1, we get that 48K call that I had, or even a little higher would be nice. I don't care as long as that trend keeps going. So that's what I'm looking at for Bitcoin. I'm not too nervous with these corrections that we've been seeing, because the indicator, like you're talking about being contrarian, you can go out there and look at all the different things that people are saying that it should crash. But if the indicators and the patterns aren't showing that crash, then there's no reason to be contrarian. Right. Just follow the trend, because the trend is still there and it's not breaking down yet. So that's the way I'm looking at it. Hopefully
don't be contrarian for contrarian's sake, right?
Just because everyone's saying one thing doesn't mean to go to the other. Get some indicators and get some evidence that is actually happening. And right now I don't see it. Not that it can't switch tomorrow, but at least the indicators will start to flip over and let us know. But right now, the indicators are still saying buy dips, buy into those, those support points, the pivot levels, or anywhere there's that buying interest based on whatever strategy you have. You buy into that. Mine's buying into the shallow fib, and that's what I do. And right now, on the daily at 29.7, that 29.7, 29.8 area is that area to buy, and so far it's holding, and I like it. As long as it continues, I'm happy with it.
That's right. That's
right. It's convincing. I mean, I think both of our methods are definitely looking at it in a different way, but we're still coming in relatively close to each other's targets. Now I got a 48, maybe a 50, and then the trend line break is at 52.
52, yeah.
But you have 54. So anywhere between 48 and 54, if it goes up to that,
amazing.
I don't care. That's a big enough range for me to be happy with it. So
exactly, right. I mean, it's like, I think a lot of traders unfortunately get too caught up in it's got to get exactly where I'm looking. I'm like, shoot, I've been talking about this higher one there since we were down around below 20, and so you're talking about a nice big rally there. I'm good. I'm good with it if it does that.
And we're enjoying the run since the beginning too.
Not fighting it along the way, not being contrarian just to be contrarian, not being stuck in the recency bias, as bearish and whatnot. Again, same thing with I know you were looking at stocks the same way as well, and so we've had that going. Let's pull up the dollar here real quick, as we always do. Again, we had the NFP release this morning, and you can see that the the dollar didn't like that. Now this here, of course, guys, as always, is the it's not the DXY itself. It is the dollar futures that you can trade on the ICE exchange. So these are futures products based on the DXY, right?
Yep.
But same idea. And so I'm looking for a breakdown below wave X here at 101.96. We're at 101.95, so we've got that. So breaking down through that suggests that wave 3 is in progress, and that'll be, I think it gets us right around the 99 area, 99 point something. Let me see here.
Please say 99.175.
On this one, it's 98.215 actually on this chart here. So yeah, the idea basically being that we've got, and of course, with this being a bigger picture here, right? So, whether this is off the one, that one almost 115 area up here is an all-time high. So off that, whether it's A or one of A down here at the February swing low, and then of course two followed up after that, or B, and then we have one of 1, 2, 3 here, or one of C either way, coming down, like I said, this gets us then, 1, 2, and then a 1, 2 right here. So this is important. This is kind of like Bitcoin, right? So we have a 1, 2, 1, 2, and then we've got 1, 2 of this 3 coming down, right? So you're going to get a 3 of 3 breaking down through this, this strong support area that we've had almost this entire year, right? That's the same thing if we're looking here as this right here, right? Same 1, 2, 1, 2, and we're getting ready to do, 3 of 3 here, breaking out through this significant resistance. So, it looks like we're good for that. I mean, things look like they're set up as they need to. Like I said, that'll get us this 98.245 here. The larger degree wave 3 has a minimum expected target down here around 95.8. Now, what's likely to happen is with this movement right here, we're likely to get 5 waves down toward the 100 area. Again, where all this support is. So we'll get like a 1 here and a 2, and then we'll break through on that 3 of 3 of 3 of 3 kind of thing here. But that should be a big move. Again, it should be large volume, large candlesticks coming out through that, large candle spreads coming out through that, which is what we usually expect to see, guys. If you're breaking through, if you're looking at a major area resistance, whether it's diagonal or horizontal, you should expect that to be wave 3 in Elliott wave. It's that third wave where you get all that participation from everybody. It's at that point people go, oh God, I'm in the wrong way with the other way. So now we want to go with the trend, and everybody kind of jumps on board. And that's why you get the large candle spreads, quick movement, large volume and stuff like that. And that also, when you're breaking out the large candle spreads with the large volume, is that confirmation that it's not a fake out, that's a real break. So that's what I'm kind of looking at there. Let's see, what's Fibo got here on his. Now remember, mine's a larger term count, guys. Fibo's usually got it more dialed in, a little bit closer there. So
yeah, I got the 4 hour and the daily. Interesting thing is the actual bear zone actually hit on this last candle. So I'm working it in here. So it actually went into the bear zone here. So I put in my threshold, so you can actually see how I kind of look at this. So these fibs here, which basically this 38.2% level at 102.86 is now going to be the previous shallow fib, and it's already had many settles underneath. So you need at least the 3, and we've had 1, 2, 3, 4. We're on the 5th one. So this one actually moves over. Just going to take off the extension here. So now this fib extension level is that first level of support. It's not where I'm looking to buy on the 4 hour. It's the 200% down here at 101 could be a possibility, working its way to the downside. But it might not even be there. It might even be further. It just depends on how much the momentum starts to build for the bears. Yeah. But the 4 hour just went bearish. So if you wanted to actually short it, that this is the time to short it with a target of 101 for that trade. I'm not going to take it at this point in time, but that's how you attack it. But then when you look at the daily has been in the bear zone and has not, even though it went, kind of corrected back to the upside, it never went back into the bull zone. Now, the first fib extension target's right here at this previous low, which is going to be a spot that you're going to find some buying interest, probably pop it up again and then work our way down. But my actual buying target is at 99.175 at the 200% off that threshold from previous. So to me, with the 4 hour going bearish here with 3 settles under the previous shallow fib, that's kind of a short signal. The daily's still in the bear zone. So all of that together leans to the downside, which, if the inverse correlation still holds, which it doesn't always happen, but if the dollar continues to crash a little bit here, then it's going to incentivize Bitcoin and other risk assets to increase. So there is that possibility. So right now with the 4 hour going negative, daily still in the bear zone. I'm leaning toward that 99 as that area to watch to consider even going long. So I'm kind of with you on the same kind of deal. Just interesting that this last candle just went 4 hour or on the 4 hour went bearish. So So anybody playing along, it's a short with a buy at 101 to buy it back.
Yeah. And I think something else I was just thinking about here was if we're looking at this, again, guys, you're always looking left here, right? And so we've kind of got this. If I can draw this in here, I'll make a bigger lines here. There we go. Realistically, we're getting, lower highs into consolidation here, right? So we were low, we rallied up, we hit that same low area again, rallied up, lower high. We're coming down. And so, again, the idea is that we would kind of, make our way down into here, probably bounce up, and then the breakdown would come like this. So it's basically just like, it's looking like a descending barrier triangle here. And so, hitting this kind of this 199 area, again, that puts us right here where we are, where we're already kind of hitting these lows, this whole low area. So the idea would be that we get that and one more push up and then that breakdown through it. And so that would align with that kind of that target area that you're looking for there.
Yep. So yeah, I don't have my weekly up at the moment, but it definitely has that same pattern on the longer term look. But that 99 is just that stepping stone to the downside. To where you want to be buying it to take advantage of the correction, the counter move against the overall bearish trend.
Yeah. Okay. Great. So, what other charts you got there, man?
The ones I have open at the moment, I have ETH, I got SPY, I got gold, LTC, Solana, Stinky Linky.
Charts, man. Throw them out there. Throw what you want. Throw what you got, man.
Well, we can start out with ETH. A lot of people look at that. The 4 hour right now is in the bear zone. Depends on how risky you want to be, but the fib extension target actually hit. So some people could be buying in my group could be buying right in that area. My target was to get back in at the 200% down there at 1794. Didn't quite get there. Starting to work its way back up, but it's still in the bear zone. But if you wanted a spot to buy in the bear zone, you would have been buying around 1850 and working your way there, and place a stop underneath. If I do play the fib extension targets, I would probably stop it out with 3 consecutive settles under 1847, or it just depends on risk management. It depends on how you have it set up. Some people use percentages, some people use different ranges and all that kind of stuff. I usually just do the 3 settles underneath. Unless my exposure is really high, then I'll tighten it up a little bit, because there is a lot of risk in waiting for 3 candles. But historically it works well, and I wouldn't do it if I didn't have it back tested and know that there has been a few times here and there over the last 5 years or so that it really hit me. But beyond that, it's generally a good overall kind of thing to look at. But right now, a little bit on the bearish side. But I do like the look of this as possibly kind of holding there and try to push it back up a little bit. But we're at the shallow fib right now, testing on the downside. So there could be some selling interest in here. So I'm really not playing this until I get down to that target. But when you flip over to the daily is still in the bull zone. So that's why some people might be buying that fib extension area.
Yeah.
Because the daily is still bullish. And it broke the trend line, came back and retested, kind of stair stepping. It came down a little further than I would have liked to see. I'm still 30% long, basically just underneath here. But basically, if it gets into the bear zone and I get out, I'll probably roughly break even. But I want to hold that position, because the way it's holding here and not breaking down into a new bear zone, and it's beyond that trend line, and we're finding buying interest. It's kind of wrapping around the 61.8% level of the threshold. I'm kind of happy with it. I'm not like exuberant about it, like, woo, let's like just jump all over it. But I'm willing to hold my longs and kind of see if we can move up to that target that I have at 2165 off the that matches the extension at 200%, and it's also the trend line break, which is right around that 2165. So that's what I'm kind of seeing, some buying interest down here. Hold it and see if we get a run up to that 2165. So that's what I'm kind of looking at on ETH. Nothing crazy at the moment. Just kind of holding the longs and seeing if it's going to continue or not.
See if it do its thing, right?
Yeah, to do its thing. SPY. I was trying
before you go, let me go this real quick. Brian was saying that he said one thing that makes it difficult to make sense of crypto Twitter is whether their bias is fundamental analysis rather than technical. And my answer to that is it's emotional. I don't even think it's fundamental. I think even their fundamental view is emotionally charged. And then when they give you a chart on there, they're using their emotions to say, listen, this is my opinion. And so from there, then I'm going to use technical analysis to prove what my emotions are seeing. And, it's not that they're terrible people for doing that. It's hard. Emotions are hard, guys, especially in trading, especially when you got real money you're, got a lot of people following you, right? And you can't, oh my God, I can't look wrong. Dumbest way to think about it, honestly, guys, because you're going to be wrong, period.
Yeah, but, it's emotional for sure. Because I can go on Twitter and just start reading and kind of scrolling through, and everyone's like bearish and scared and everything's going to hell. And then 30 minutes later, I could pop back on and and the market popped up $500, and the next thing everybody's optimistic and we're going back to 50K, and you get that you get those swings just in emotion within hours of each other in the same day. I'm like, come on, people. I mean, markets are going to trade. They're going to move back and forth. Don't make little moves. Just change your whole outlook on things.
Yeah. The second something different comes out, they're like, what? No.
Yeah. It's kind of crazy. So I tell everyone to ask that person questions. If you are saying that it's bearish, show me why you're saying it's bearish. Give me some actual information instead of a tweet that says, "Oh my gosh, we're bearish. We're going to blah blah blah." Well, that's great. I need some evidence. And the thing is if they don't answer the question, then just run. Don't even listen to them, because if they can't answer the question and give you some evidence on it, then they're not worth following to begin with. And they're really only doing it to build their own likes and hits and views and all that. So I always tell people to ask questions. And I don't know about you, Chris, but I'm sure you do. I get multiple questions from people all the time, like constantly. And I'm happy to answer the questions, because people are asking because they want to know. For one, they probably want to learn. And plus they wanted to have some evidence that they're seeing something in theirs. Yeah. Are other people seeing the same thing? And does it make mathematical sense? Does it make indicator sense? Does it make TA sense? So I really feel like if you ask people questions, that's where you can learn, and then also kind of reduce some of your emotions. And that's the key. When
emotions just come from the unknown, right? I mean,
everybody has them. I mean, I get emotional on sometimes too, but you got to kind of take a deep breath, step back, and kind of sort of like when you're going to buy a big ticket item, like if you're going to buy a car or something, you're not just going to walk in there and go, well, you shouldn't. you shouldn't walk right in there and go, man, this car is beautiful, and you buy that thing off of emotion, and then you get home and you're like, oh shit, what did I do? It's the same kind of thing. You don't want to just jump on something because you're emotional. Take time, come back, look at the car, check everything that you want out of it. Look at the financing. Does it really help with you? Can you afford the payment? Whatever. It's that same kind of thing in trading. Take a step back. What's happening? Is this what's going on? Do I like the way this is looking? Are the indicators showing this? So you want to kind of not just jump on something because you're reading it 100 times in a Twitter feed. That's the worst thing to do. Yeah. And it's a double-edged sword. It's like Twitter's a great thing for social interaction, but it's terrible when it comes to people trying to learn TA or even fundamental analysis. Whatever you want to learn, it's not a real great place to learn. And that's why we have places like me and you and others. If you find another place that you can learn from, that's great too. Find somebody you can learn from. I mean, that's really what it comes down to. You say that all the time. Totally in agreement. Get a mentor. Get somebody that can help you along the way as a co-pilot. Flying a plane.
Help you out. That's right. That's right.
Yep.
All I want to say here really with Ethereum is I noticed that we've got this pullback to the daily pivot. We're about to reset down and oversold. If we lost that, I'd be looking at the S1 pivot right here at about 1722, 1723 potentially. But right now, I can definitely see us possibly holding right here where we're at, and then kind of heading up higher. If we look at this, I mean, it looks like, we've got a good impulsive move up, higher highs, higher lows. We're just kind of hitting this resistance here. So, popping out there will get us up here around the other high at around 2,100. And if we can pop through that, I think kind of like Bitcoin, away she goes. And she would, follow up along with Bitcoin on some probably a pretty good move up.
Yeah, is this the daily?
Yeah, it's the daily. Okay. So yeah,
I'm just relatively close to what you're saying. Mine was like kind of 1787. What was yours? 17. What was that? R1?
Oh, the S1 here is right around 1723.
Yeah. So it's relatively close.
But that 17, we've got this candle split right here that comes right at this previous area of support and resistance. And that would be something I would also watch maybe for a wick down into that if we got it right around 1790 or so. What was your number?
Well, on the daily it's 1787. On the 4 hour it's 1793. So it's right there. Yeah, it's right there.
Yeah, that same area. By the way, guys, again, zoom out. You can see that like Bitcoin, all we've kind of done is run up multiple times into this resistance area. I mean, big picture is kind of this thing, right? Ultimately, I mean, this is just a quick idea, but you're getting higher lows up into this resistance, up into this kind of area right here. And so, the more times you're getting in there, the more it breaks down, as far as what kind of resistance is in there. So, we continue to push up into it. If we're breaking out above this, I mean, we should see this thing probably teleport up here to, 2,800 pretty easily. They get you, I mean, we got a little bit of a stoppage right here around 2,400. But other than that, it's just a lot of candles just straight up, nothing really stopping them on there heading up. So, another way to look at this, guys, I talk about low volume nodes and high volume nodes. You can see that we're getting stopped right here at this low volume node. We hit it over here back in May of last year. And we hit it again here in April of this year. So we've hit it a few times now. If we're coming up there again, we should take it out. The high volume node around 2,400 would be that quick target. But then ultimately looking to get up here probably around 2,800, at least on a rally on through, just based on structure and visible volume there on the pricing. So just something to kind of watch there, guys. Let me see here.
Yeah, I just pulled up Solana on my screen because it's another one that's kind of working with my system. The market came down and tested this bull zone down here, and it held, and it's working its way back to the upside. It definitely hit the first target. This other target here on a previous threshold is actually, it touched it a couple times, worked its way down, but it didn't hit the shallow fib here, which is a bummer. Because you would have already taken profit off of the last move, but the other thing I look for is if it doesn't hit the shallow fib and it goes to make new highs, as long as we get 3 settles above that previous target, if we get 3 settles above 2069, and so far the first 4 hour candles above it, and we're on the second one. So if we get a third one above that level, I'll go ahead and go long with the target to the. It depends on your risk tolerance, but if you go long here, could be a quick trade to 2323, which is the fib extension target, or all the way up to can't see the number.
Is that 28?
Yeah, 2863 or 2862, right around there. So right now, this is staying in the bull zone on the 4 hour. Could possibly be a buy here. It would have been nice to hit the shallow fib, but it doesn't always happen. But if it does get above a previous high, gets those settles, then you want to go long to continue that trend. So I'm going to watch that. And then on the daily on Solana is on the, if it stays up here on the close today, then it'll actually go into the bull zone on the daily. It's well above the shallow fib because we're getting the rally up. and then that will be a buy. And then your first, I mean, it's a daily, so most of the time I go to the 200%, which would be 29.82. If you want a real short trade, you're going to probably go somewhere in this fib extension zone, which would probably be this previous high, which puts you right around 24 maybe, within that range. So so you either want a quick trade, or depending on your risk tolerance, going all the way up to 29. So I just like some alts that are out there that are actually starting to break into my zones. Solana is definitely one of them that I'm keeping an eye on.
Yeah, man, I like it there too. And I'm looking at your chart there, and it looks like they're right about where you're, that high right there where you were
here.
Not that one, the one previous, a little bit higher. Yeah, from that one down, looks like it's 3 down, 3 up, and then 5 down. So I mean, it looks like a flat correction, which is kind of in line with with basically, well, I mean that's a longer term flat correction, but nonetheless, yeah, I mean it looks like it's ready to rally. It looks like that low may be in. You've got a nice long wick there on that swing low, right into the previous area of the demand over there on the way up, and so right there on that $13 area. So I mean, I like it.
And another thing I like is this. If this actually comes to be, this trend line break here that's forming at the moment would definitely give us a nice little change of look to where we get up into the 30s or even 40s, kind of double in price. But I mean, not that it's going to go straight there. But one thing I like to see is if it does break this into the daily, into the bull zone, with that being a longer term target. That target's beyond this trend line. So to me, that is a nice signal that we move up to that. Like I said, you probably want to get into that 24 on a short trade, come back down, hopefully hit the shallow fib when it makes that new bull zone, and then work our way up from there. So I like what you're talking about with the structure, but then I also like the way the trend lines are breaking and going into the bull zone at the right time. I like all of that working together. So this is definitely one that I'm definitely going to be keeping an eye on with my system.
For sure. I mean, it looks great. I think, that's that one that I was on that Wendy O show back the 30th or 31st of December when we hit like $9 and some change. And I was talking about buying it there, and it looked good to buy and to head up, $15 minimum and then probably 30. And, we've had here lately, we've had a little bit of we have that pullback, as we can see there on your chart. Wasn't overly looking for that kind of pullback, but nonetheless, I mean, it's still, we almost hit that 30 target before we did the pullback, and now it looks like we're ready to do it and head on up. I wouldn't be surprised to see 50 plus coming out of it before too long, And so, I mean, we look at that. I think, these are some of the ones, and you can tell people are still really emotional. I saw a tweet the other day where somebody said something about Solana and something else is pumping. So, the market is a scam and whatever. And here's the thing, guys. The best part about it is it doesn't matter if it is or isn't. If price is going up and you know how to use technical analysis, you can get in there and get out. You're not, you're not manipulating it. You're not doing it. You're just taking advantage of what's going on in the market. And, I think people, again, they get too hung up on this is the next great thing. This is the thing. And that turns them into these long-term holders against their will, right? They might have been willing to hold it up as long as price kept going up, but then it dropped down too far for them to convince themselves to get out. So now they're holding it for 5 years, and that's tough. It's tough on people.
Yep. But the way I look at it is, I don't know anything about Solana, to be honest. I really don't. I don't know what they do. I mean, I really don't know much about them at all.
Don't have to.
But I do know how to read a chart.
Yeah.
And I look for the proportions. It's not about price for me. It's that proportion that the Fibonacci levels that form. Yeah. And what makes me like this one is when you look at this, it went into the bear zone right here, and kind of came down, came back up, tested a little bit, and then it dropped. And then of course we got our target. Sold here. You would have looked at the 16 level, but it actually went through there. And one thing that I like is when you look at this with the way I look at my Fibonacci levels, I look at this zone between the 127 and 141, and then this previous bullish threshold back here, when it went into this threshold, was inside this zone, and that right there, if I missed it because I wasn't watching at the time, but that's a buy. The buy was at 13.15. Yeah, and that's a buy in the bear zone, and that works out really well. Holds there, and now we're working our way back up. So I could have been long there, which would have been nice because that's the way I play the system, trying to find that, catching the falling knife kind of thing, I guess. So you buy there, work your way up. If it goes back into the bull zone right here, you'd be pressing that position and actually going long and adding more to that run, or you could have traded it out. But I like the way the structure is, the proportions that it is. Once it breaks down, it's hitting. It's the buying interest is coming in where I want to see the buying.
You would expect to see it,
yeah. And if something's doing that, it gives me a little bit more confidence to get in on a trade, because the patterns and the support's coming in where it should, the resistance is coming in where it should, and you just kind of ride those support and resistance zones on the way up, and as long as it's staying that way, ride the trend and take the profit. And that's the key. If it hits a profit, if it hits where you want profit, take the profit.
Don't keep holding on hope and it does something else, right?
Exactly.
Take the profit, lock it in.
But if I go up to 24 and I sell it and it sells out and it rallies to 29, oh well. I mean, I took my profit, but then again, I don't know what it's going to do.
Exactly.
I'm going to take my profit. It could drop back to 20. I don't know.
Did you guys hear that? Did you guys hear that? That's exactly what we talk about. You don't know for sure what it's going to do. Take profits, take them off, and take them consistently. If you do that, you're going to get where you want to go in terms of success and creating wealth for yourself as far as trading goes. It's when you want to keep holding on to it, going, oh, it's up here and it looks like it's going to break out higher and go so much higher, and I'm scared I'm going to miss out on that little bit extra, that you don't lock it in, and then it turns and goes against you and it drops, elevator down, right? Yep. And then you're like, crud. Then you can't convince yourself to get out. Don't do that. Don't put yourself in that situation. Take profits, take them off.
That's probably my number one question I get a lot from people, not the people that are in my group. It's more the people outside of the group asking questions. Like, well, why did you take profit at 24 when it rallied to 29? I'm like, because my system told me to. Yeah. I'm not doing it because of emotion. I'm doing it because that's the time that my system says, hey, this is a good spot to do it. Then go ahead and do it. It's the whole thing of the coulda, woulda, shouldas. I should have done that. I could have done that. I would have done this. Well, you didn't. And all of a sudden now it's all, you're playing emotion.
Exactly.
Exactly. That's the worst thing to be in. And it's a nightmare, because then all it does is it just escalates on each other. And then next thing you know, you're more emotional than you were before. And then you're like, oh, great. Now what am I going to do? And then that's the next question I get. Well, I didn't buy here when I should have. Now what do I do? I don't know.
You wait for the next thing. You don't just try to chase it up.
There's always another opportunity. Yes. You just have to look for them and find them. If you get out and it rallies on you and you missed out, just wait. You'll find another one. Just wait for the next one. Don't be greedy.
Exactly. What'd you say? You say you have a SPY chart there?
SPY. Yeah, let me look at it. I got two of them. I got the 4 hour here. Bear zone. Yeah, I missed the fib extension target. I was going to buy it if it dipped down there. It didn't, so I'm not in anything at the moment. I'm waiting for a new bull zone if it goes, but it's a little ways away at the moment. We are above the shallow fib. So if it does go bull on one of these candles, it'll be a buy. But right now, being in the bear zone, I'm not really doing much. So I'd either buy the fib extension target or buy a new bull zone. I do like the structure that it could start to push higher on the 4 hour here. Yeah. Because when you look at the daily, the dailies worked really well. We got in, we sold, we bought back, we sold again. But the thing is, I missed it right here because it didn't go quite far enough. Yeah, it came back up and retested the highs and started working its way back down again. I don't know if it's going to get down there or not, but the way I play it is I either buy the shallow fib, or if it gets 3 settles above this level, then I'll just re-enter, and it'll be into it's a support and resistance flip. Right now it's resistance. You break it, it becomes support. I'll rebuy it at that higher price on a filtered break. I like to have those 3 settles, because that way it kind of the 3-day rule for me is worked really well historically, because it's enough time to kind of filter out all the noise, like all the people trying to play around that area. Let it kind of filter out, and if it stays above it 3 times, then you got a lot more structure that there's more buying interest to kind of hold that support. So that's what I'll do. But right now, it's still bull zone. We'll have to see. I don't like the way the little bit of a divergence there, but we'll have to kind of see how it plays out. But right now, I'm not in a position on SPY anymore. I took my profits and waiting to get back in shallow fib or buying a new high. So
I like that. I like that. What other charts? You said you had Litecoin there. I think everybody gonna kind of excited about Litecoin. I was talking about that, buying that around 50 back in October, November of last year. And it's been bouncing above and below 100. What we got going on here?
Yeah, right now on the near term, on the 4 hour, I got a target of basically 85 is where my buy is. Being in the bear zone on the 4 hour, we're kind of still working to the downside here. If I don't get the target, I'll wait for a new bull zone, but right now we're just working our way to the downside. But really, when I say downside, it's kind of in the same range. Right now, what I do like to see is, so far the 61.8% off this previous bullish threshold is at 96.01, and that actually is held without 3 settles underneath. Because if that breaks, then you got a high probability that it's going to go to the 100%. But right now, with that holding right here, that could be a spot to buy if you want a tight stop underneath, that kind of thing. That you can kind of play it that way, given that it's coming up out of it didn't go into the really oversold conditions, but it could be enough to kind of hold that support and take off from there. I'm not going to do that. I'm going to wait, see if it gets to the 85 or a new bull zone. I don't know if I have a daily one on that or not. Let me see if the daily is on if it'll let me. Let's see.
Yeah, I mean, all these charts, and we're looking at them, and a lot of them are kind of this iffiness. They haven't quite hit your level you're looking for, but they might break out higher. I think that's that whole idea when we go back to what I was talking about Bitcoin is, either we're kind of at that top and we're going to pull back and then we're going to go, or we've done wave 2 here and we're going to blast on up, strongly. It seems like all those ones are kind of doing that same idea.
Yeah. When you look at the daily, it's the daily went bull, hit the target at the 200%, worked its way down. So if you're playing this one, which I'm not, you'd be long right now at about 101, 102. So you'd be a little underwater at the moment, but you're still well into bull zone. Bulls still have control of the trend, kind of stair stepping. So if you're long at 101 or 102 area, you got 134 as your target. That sounds about right. So the daily structure is nice. It's holding the 61.8% pretty nicely, finding some buying interest right there, staying in the bull zone. So when you look at the 4 hour, that same kind of thing, you could be holding there to kind of get that move to the upside. Little risky, but that's how I'd play it if I was playing it. But I just got enough going on some other stuff that I didn't add anything to Litecoin at the moment. But that's where we're at. Could be long at about 100, 102 with 134 target. Let's go. Let's do it.
You guys heard that, right? Phil said, listen, man, he said, I missed it because I've got other things going on. And, basically what he's saying is, listen, you don't have to take a trade just because it shows up if you're busy with other trades. I think a lot of times when I'm talking to traders, they're always talking about this. Well, I missed that, or I'm going to miss this, or they're always worried about missing something. They got like 30 trades running at one time. They can't possibly keep up with them all. Guys, listen, trading isn't about getting everything possible at all times. Trading is about finding those opportunities that look good, getting into them, managing them well, and getting out with profit. And you can't do that. The more trades you're in, the less focus you have, the more likely you are to screw something up. And so, just like Fibo said, he's like, I missed it because I had this other stuff. It's not like he's sitting there going, oh man, I missed it, kicking himself. He said that on a few other ones too, right?
Yeah.
But he's got trades that came in and set up well, and he got in them, and he's got to manage those. So even though maybe he would have liked to have got in another trade there on one of these other charts or something, the reality is what it is. You can't stay focused if you're on 50 different trades at one time.
Yeah, and a lot of it. The reason I haven't gotten into a couple of these other ones, like the dollar and this one, is exposure levels. And you'll probably talk about that in your risk management. Right now, my exposure level is at a level that I'm comfortable with, and I don't need to add more exposure at this point in time.
Yeah.
So to me, this is a good trade to get in, but I don't need to overextend myself for what I have going on at the moment on some other stuff. So that's one of the main reasons is just exposure levels for me at this point in time. But then again, like you said, it's like, well, there's a trade there, but it comes down to risk management. I don't want to put more on. And if it all goes south on me at the same time, I'm going to lose more than that I wanted to lose.
Yeah.
Or at least projected to lose if I was going to lose.
Yeah.
And I just didn't want to do it at the time. But so I'm sure you'll touch on that in your risk management, how much on exposure levels, those kind of things. But that's what it came down to. And that's why I'm not long LTC or short the dollar at the moment, because I got enough exposure on some other stuff at the moment that I need to manage.
There it goes. Chad's here saying crypto might go up without, let me see, what'd you say here? Crypto might go up without Bitcoin, but it will dump every time Bitcoin does. Yeah, that's the big thing. Especially with crypto, guys. I think it's more so here than really any other market. Bitcoin really is kind of like this bellwether, right? And so rising tide lifts all ships. If Bitcoin's going up, then you can pretty much be assured that the rest of the market is going to kind of follow it, right? Now, other things may go outside of Bitcoin. When we had Bitcoin bear market 2018, and then, after that, we had BNB go up, and then on the next one, we had Link go up. So you can have ones that go up even when Bitcoin's going down. But the reality is, if Bitcoin's coming down, I mean, the entire ecosystem basically comes down with it.
Yeah, that's pretty risky.
Definitely something, with what Fibo's saying here, having all this exposure, if you have a lot of exposure among just crypto assets and Bitcoin drops, everything's kind of coming down with it more or less, right? So when you think back in terms of the old, the old adage about, investing, which is, you want to diversify, right? Well, the problem is if the stock market goes down, your diversification in different sectors basically is all going to come down, right? You're not diversifying out of the stock market. You're just diversifying within the stock market. So if you get a recession and the stock market itself comes down, pretty much everything you have is going to come down as well. Yeah. So definitely something to keep in mind. Again, especially I know a lot of you guys just trade crypto, and you might be, oh yeah, look, I'm exposed to different, I've got layer ones, I've got layer twos, I've got DeFi, I've got AI coins, whatever. And you go, look, I'm diversified. Well, but yeah, until Bitcoin comes down, right? Until the market itself comes down, in which case everything you're diversified in basically is going to come down. So you just want to be sure that you guys understand that. All right. Real quick, got a question here. Is this Augustine here says, I know it's still possible with AI and algos getting better each passing day. Isn't it going to be very hard to keep up trading manually? Aren't we losing an edge? Yeah, no, not really. Again, guys, these algos and these trading things are usually much smaller time frames. And this is the one thing I've always taught is the smaller your time frame, the easier it is to get beaten by algos. But when you start getting these longer term time frames, that your potential to win, to beat them, rises exponentially. And so, it just kind of depends on what you're doing. And now, I think the other thing is it depends on, do you understand how and why the market is moving like it does? This thing that I teach, right? If you understand that, it's going to keep you out of a lot of those issues. Because a lot of times, again, the algos, the way I'm looking at it is based on society, right? And then it has a way in which it plays out because people are, emotional, and they tend to play the same way, right? But the algos and whatnot tend to get based on how far is it moving. Now, some of that is based, can be worked with how people generally act and react. But if you know Elliott wave, you're okay there. But a lot of it is just like, okay, well, do you have a sentiment algo, which is, when the Fed releases its it's minutes, it flies through that fine, and then it has a sentiment check based on the verbiage used in there, whatever, and then it sells or buys according to that. Or the algo is chasing a certain percentage, right? Which is no different than what Fibo's doing here, and really a lot of what Elliott Wave is. You're looking at percentages, right? You're looking at movements. You're looking at that same thing that repeats itself over and over again. So, in answer to your question, I don't really believe so. I think if you're doing it correctly, if you're learning it correctly, I don't think that you really lose an edge in it. But again, smaller time frames are going to be much more difficult to trade. And often a lot of that is also because of our emotion. And we often, when we're trading smaller time frames, we're not trying to take small profits, right? We get in there thinking about the daily. We're like, man, if I get in over here at the very low on the 1 minute and I can get my weekly move, and that's not how you do it. The smaller your time frame, the smaller the profit you should be looking to take, because you have more noise. You got more up and down in a shorter period of time.
Yeah, I
hopefully that makes sense.
I have some on that too. I always like going back to the three main tenets of TA, just keeping it basic. The third one is history tends to repeat itself. And the way I look at that is everything in the market is based on fear and greed. So if you go back in the markets 50 years ago, it's that same human nature that is building the patterns that we see today off of fear and greed. So to me, algos are just mathematical fear and greed. So as long as there's algos are building whatever, on however they're putting it together, it's humans that are creating these algos, right? Or even if it's an AI, what does an AI even have to work with? The past. And the past is built on fear and greed. So all of these AI algos are building off of what we've already done in the past, which we're already doing anyway with what Chris and I do. So to me, it actually strengthens what we do. So to me, I've actually found it easier. The more algos there are, the easier it is for me to do what I do. I know that sounds weird, but I've been in this for so long that we've had computers for a long time. Algos are not anything new. The only thing new right now is the AI with computers that are probably doing it themselves and trying to find patterns themselves, those kind of things. But the only thing they have to go off of is what's happened in the past. Yeah. And everything in the past has been brought on by fear and greed. So to me, nothing changes. It's just the avenue on how you get to the number. I mean, that's really what it comes down to me, but I could be wrong, but
no, I think
I think it's the same, but different.
No, I think you're dead on there, man. I think you got it right on, it's not like the AIs and these other algos or whatever are making these other different levels that, trying to force the market into selling and buying at these certain areas. They're trying to, again, the same thing we do, which is ascertain where are people buying and selling.
Yep.
But most people never truly learn that. Even price action traders, they're sometimes they're good and they're good on the short term. But they don't really have an understanding of why. I've been through enough systems, over the last 30 years that most of them, they'll have a different name for the same thing. So everybody's doing the same thing, and your algos and, whatever aren't going to do anything different. They aren't going to create any new different way of forcing, the market to move in a certain way. They're just trying to capitalize on the movements that are already being made. And so like Fibo said, that's already what he and I are doing. Based on the way we both basically look at the whole idea of markets the same way, the whole social move into how it gets to where it is. Whereas most of the market participants tend to look at the charts and then say, oh, the charts are doing this, so this is going to happen. We tend to say, okay, this is happening.
We're measuring psychology. We're doing is we're trying to measure psychology in the market.
Right.
And a lot of people aren't really probably doing that. They're more along the lines of looking at price action and trying to bring news into why this is happening and why is the market moving this direction. We're not in it for the why. We're in it, to figure out where the psychology changes are. That's what we're trying to measure. Not the easiest thing in the world, but that's the main goal, is that sentiment change, that social mood. If the social mood is a certain way, the market's going to react a certain way because it's people in the moods that create
They're
that.
Buying or selling, right? Yeah, creating what we're seeing on the charts. Yeah.
Yeah. Once I figured that out years ago, it's been such a awesomeness just to have that knowledge, because the first 5 years of me trading, I never even considered it. Yeah. And then you start learning, and I'm like, damn, this totally makes sense. Yeah. It just clicked. It's like, boom. It's like, okay, I get it now. I totally get it. So it's just one of those things. But we'll see. We'll see if now if we get to quantum computing, we got more worries than trading. So
right.
Yeah. So until then, I think everything will be working the same way, just different ways of getting
there. Yeah. No, exactly. Let's see here. Well, shoot, there we go. So Bollinger, I just want to get this before we get out of here. He just tweeted a little bit ago. What did he say here? He said, I'm just copying this off there. Classic Bollinger Band pattern on the daily. Bitcoin blast off, rip through the upper band, find support at the middle band, and then turn higher. So he's expecting, support here and to rally up and out. And again, that really aligns with that idea that if we get that, we could potentially see a really nice, strong move up that most people are going to miss out on. Because again, most people are still expecting lower. And even if they aren't, they're fearful that they're going to get lower. So it's going to be hard to pull the trigger and jump in there. So yeah, I think that's pretty great that he just did that. What he did about an hour ago, looks like, there on Twitter. So if you're not following, man, you should. B-Bands there on Twitter. And of course, FiboSwanny.
And let him know what your favorite IPA is.
Let
him know what your favorite IPA is, because he likes IPAs.
Yeah. Bollinger likes them IPAs. Yeah. Fibbo, you're at FiboSwanny there on Twitter, right?
Yeah. I'm FiboSwanny on everything. Everything.
So there you go, guys. If you want to follow Mr. FiboSwanny here, I would suggest it. A lot of good stuff coming out of there. Again, I think one of the best things about having Fibbo with us here at TWC and having him on here every other week is that you can see that two people can actually start from the same point. Look at the charts, the way in which they're getting to where they're going, just slightly different, right? I mean, the systems are different, but we tend to get to the same target areas. And that just goes back to the same thing which I told you guys before, which is learn something, learn it well, and then stick with it. Stop bouncing around from thing to thing to thing every 2 weeks. 2017 in crypto Twitter was a big, for me, was a big, eye opener to what people were actually doing. It was crazy. Every week it was something new. Every week it was something new. They try it one time, they'd half-ass, they go, oh, look, it doesn't work. Those people, by the way, are probably not on crypto Twitter anymore, or they're perma bears at this point now because they just hate life and they hate the markets. And, at the end of the day, guys, remember, listen, you've got to have the proper outlook if you're going to trade. If you're going to trade, you have to believe that you can do something. You have to believe that you can affect change. You cannot be in your life. You can't be a victim. You have to understand that everything that happens to you, you had some part in that. Now, it doesn't mean you are directly responsible for it. Again, one of my big analogies I use is if you're walking down the street on the sidewalk and a car jumps the sidewalk and hits you, puts you in the hospital. I mean, it's not your fault that the car hit you, right? But you had responsibility in the fact that the decisions you made led it to the point that you were walking down that sidewalk that day at that time. And it may seem kind of, silly thinking about it. And well, what good does that do? Because in your mind, if you can accept that responsibility that you made decisions that led you to that point that had all this happen, then believe it or not, it makes it much easier for your brain, for your mind to forgive yourself and to forgive what happened. And you are able to then move on. And this is essential for trading, because otherwise you're going to get locked up in the trades that you didn't make or the bad trades you made. And it's going to make it really difficult to ever get on there and get better and make trades that are going to make sense and going to make you money. So just wanted to kind of end it on there. As always, guys, remember the only thing you control in the market is how much you lose. So please keep working on that risk management, right? Again, we do have our risk management workshop tomorrow at that t.ly/N9LQA. It's just a short form web address there because the address of it is so long. But it just makes it quick and easy for you guys to get there. Register for that. We've got a couple of bonuses in there, which I think you'll like a lot. You do get one of those is that you get the recording, access to the recording after the workshop, so you can watch as many times as you want whenever you want. So you don't have to worry about, oh my God, I'm in Australia or Japan or something, and it's middle of the early morning, and I don't want to be up that early to do it, right? So you'll have it. But we'd love to see that. That's going to happen tomorrow, guys. That workshop is tomorrow, okay? At 1 p.m. Central Standard Time. So there's that. Fibo, really appreciate you joining as always, man. Like we said, guys, Fibo comes on every other week. So unless something happens with his schedule, I plan on him being here 2 weeks from now, which is, what is it, 21st?
Yep, not going to happen.
21st. Not going to happen? What's not going to happen? You tell us you're not going to be there already?
Yeah, I will not be there for that one. I'm going to be on vacation. So.
Oh, look, he's going to take vacation. Look at that. Like, I don't know, man. Why people think they can take vacation? You got responsibilities. So anyway, it'll be after that sometime then.
Doesn't mean I'm not going. I might not be going anywhere, but I'm going to be on vacation.
Well, I'll let you guys know we're up to that. But basically, we usually try to get every other week per his schedule. And come in here with us.
Yeah, we'll figure it out. We'll figure it out.
Yeah, at least until I can convince him to leave his real job and come work with us full time, and then I can force him to be on every day. No, not really. But anyway, okay, guys, listen. I hope you guys have an amazing weekend. Y'all trade safe. Remember, risk management is where it's at. Other than that, look for a trade. Not don't enter a trade just because there's a chance. All right, guys. Too many people out there doing that. You're gonna lose a lot of trades. Look for the ones that have the higher confidence entries. Look for the ones that have multiple things coming together that says it's more likely to happen than not. Enter those. You'll get less trades, but you'll get less really bad trades, which means less money you have to make up, which means you can get where you want to get, wealth and finance-wise sooner. All right? All right, guys. Really appreciate you all coming in as always. I hope you guys have a great weekend. TWC members, I will see you guys over there in just a bit. Mentor members, in an hour, we'll have our weekly mentor session. So we'll see you guys there. Fibo, as always, thank you so much for showing up. Everybody else, have a great day. And we'll see y'all later. Take care.
All right. Thank you.